Do you trade options and need help growing your account? Are you trying to generate consistent monthly income? If you said yes, then look no further. No matter your trading account size, OptionsTradingSignals.com will teach you how to find winning option plays, execute trades, and profit from the passage of time known as theta. Visit www.OptionsTradingSignals.com today.
This is your Trader Tip of the Week. I'm Brian Benson with this week's tip. I'm looking at Amazon, which is trading post 20-for-1 stock split. So after the split, both the shares and the options are much more accessible than they had been. Now, the stock has rallied a bit, and I don't want to chase it here. So although I would like to buy some shares for longer term, I probably want to wait for a pullback to do that. I could also buy some long calls and leverage my position in a long position that way. But one way to address this concern about chasing the shares here would be to do a call diagonal spread where I'm both selling an option and buying an option. And the way this would work, I would go out to perhaps January of 2023, and I'm looking at a $100 strike. And that strike has about $6 to $7 worth of time value in it. Now, I would like to recover that time value in the first short calls that I sell. So I'm looking for the 15th of July here, about the 130 strike, which is going for somewhere between $6 and $7 right now. So that premium I would collect would approximately cover, maybe plus or minus a little bit, but it would cover the time value in those long dated calls out in January. Now, the idea would be to collect more premium and sell more credits going forward. So as the July expiration got closer, I have this theta time decay working in my favor. I'm selling a lot of time value, and it's getting less valuable as we get closer to the July expiration. So as we get closer to that date, I will look to roll those calls forward and collect some additional credits. And I can theoretically keep doing this month after month. You can do it on a weekly basis if you wanted as well. But I'm collecting these credits, and every time I do that, it reduces my risk, my cost basis on those long calls out in January. And so the net effect will be is over time, I will own those long calls at a deeply discounted price. And if I'm able to roll calls forward enough and collect enough credits, I could potentially even own those long calls out in January for free. So I like the sounds of that, and this is a good way to not worry so much that I'm chasing the stock here a little bit, because I'm collecting premium for those July calls that's pretty rich right now. So anyway, that is the weekly Trader Tip. I'm Brian Benson. I'm with OptionsTradingSignals.com.